This week is going to be one of the weeks where you either make it in trading or feel like you can completely give up. We have three interest rates decisions, starting with the RBA, the Reserve Bank of Australia, which that has already happened, and they hiked their interest rate. That is why we see AUD strength. We have the Bank of England, and we have the European Central Bank, the ECB. These interest rate decisions are going to be very, very important because central banks, these guys are the referees of the global financial markets. They have the power to turn things around. The currency strength, the indices, the commodities, everything. So, paying attention to the numbers and the forward guidance when they speak as to what it is that they want will help you the most, not only for the week, but for the whole quarter. We already heard from Powell last week. A lot of people could not decide whether he was dovish or he was hawkish. But if you listen to him very well, he said they've done a pretty much good job to bring inflation down. If you look on the services side, on the good side, it's still a problem because the inflation is due to tariffs. And he thinks and believes that this is going to be a one-time effect of tariffs, meaning that the more you pay attention to tariffs, then you will understand their next move. If the tariff war can come to an end, or there could be de-escalations in that, then it means the Feds will have a much more chance to cutting interest rates. But at the moment, they say they are neutral. Okay? Why? The external factor is the tariffs that is inducing inflation. So, for you going forward, if you want to understand how the markets will react, because the markets look at data from press conferences, they've already said it that they are happy because on the services side, inflation is coming down. As much as it's not coming down as they would want, it is because of tariffs. So, if tariffs can de escalate, that will give the Feds an upper hand to control inflation even better. The market will move based on those expectations. Now, when it comes to the Bank of England, you need to be trading the pound pay. You need to pay it with either a weak or a strong currency, depending on the data, the vote count, and the forward guidance that we're gonna get from the Bank of England. If they come very hawkish, that they are not happy, or they come very dovish, you need to know what to do. Scenario number one, they come dovish, they are looking at a policy to cut rates, to increase growth. That's a weaker GBP and a stronger stock market. The UK 100 will push to the upside and the pound will push to the downside. Because why? If you cut rates, you give more money, more access to businesses to grow, but you are discouraging foreign direct investments to come into the money market, hence the loss of the demand for the pound. Right? That's what's going to happen. But if now, let's say they come very hawkish that they want to fight inflation, inflation is still a problem, that will make the pound stronger because yields are going to push higher. People from abroad will want to invest to get higher yields. Stock market will tumble, UK 100 will sell. Then you pair that with something weak. Okay? So today we had the US ISM manufacturing data. We know that the PMI has always been below 50 for quite a long time now. So today was the first time we had stronger numbers showing that there's contraction in the manufacturing sector. This is why stocks were bullish for the day. This is why you see dollar strength. You understand, because of that. All right. So based on that alone, dollar is strong for now. You need to wait for more reasons going forward if you want to sell the dollar. Because based on Paul's last statement, as dovish as he is, the market is taking it as a neutral stance. Alright? It's still data dependent. You need to get more data that will say the dollar is weak. AUD increased their interest rates. AUD, we know they have an inflation problem. It's one of the strongest currencies, and I said the first quarter of this year, the money is in the AUD currency because inflation is a problem. Find a weak currency. So, of these two central banks that are yet to release their statements and their interest rates, find which one will be very dovish, pair it with AUD and buy AUD, what, or GBP AUD or Euro AUD, depending on the strength of the relative economies. That's where the money will be.